Warren Buffett is a legend among investors, and anyone who invests their money knows about his spectacular rise to the top of the food chain and highly revered by many who want to achieve the same heights with their money. Watch this video if you have $10,000 that you want to convert into $1 million.
Ouch!
Hi, welcome back to our channel. Glad to see you're here in this video again, because I've something really valuable to share, my friend. Today, we're going to learn from the man himself, Warren Edward Buffett. He's an American business magnate, investor, and philanthropist who is easily one of the most successful investors in the world, and he has a net worth of $113 billion. He is also the fifth richest man currently right now. Buffett has been the chairman and largest shareholder of Berkshire Hathaway since 1970. He has been referred to as the Oracle or Sage of Omaha by global media. He's noted for his loyalty to value investing and his smart spending despite his immense wealth. Buffett is a philanthropist, having pledged to give away 99% of his fortune to philanthropic causes, primarily via the Bill and Melinda Gates Foundation. He founded the Giving Pledge in 2010 with Bill Gates, whereby billionaires pledged to give away at least half of their fortunes. So how do you get $10,000 into $1 million? Well, it's a simple mantra that says you cannot fail unless you buy the wrong stock or get excited at exactly the wrong time and make bad financial decisions. The year was 1942, and the world was in the middle of World War II. The U.S. was losing the war, and bad news after bad news was coming in one after the other. The same was being reflected by the stock market as well. It was not overall easy and smooth going for anyone. The hero of our story was studying the movements of the called City Services preferred stock, which just the last year in the stock market was $84. It came down to $55 in the January of the year, and then in March it reached $40. A very young Buffett asked his father to go ahead and get him 3 shares of the City Services preferred at $38.25. The amount he wanted to invest in these shares was the total of what he had collected from his earnings previously. His father listened to the young boy and bought the 3 shares that had requested from his father. The next day, the stock market drops 2.26%, which was so drastic that it could be compared to a 500-point fall in modern times. The stocks his father bought him were at $38.25, and by the end of the day, the stock had fallen to $37. The stock did go on to be called back by the City Services at $200 a share, but of course, Buffett didn't wait for it, and he sold his share in July of the year at $40 and was happy to pocket a gain of about $5.25. He was happy to pocket the change because he had seen the stock fall all the way to $27. Now forget the incident as it happened to Warren Buffett and think you had in your hand around $10,000 which you invested in something called an index fund. What is an index fund, you ask? An index fund is a type of mutual fund or exchange-traded fund that seeks to track the returns of a market index. The S&P 500 index, the Russell 2000 index, and the Wilshire 5000 total market index are just a few examples of market indexes that index funds may seek to track. So let's say you choose to invest $10,000 into the S&P 500. Just sit back and think at the amount of money you could have earned if you had one fundamental principle. A principle that you would follow if you were to buy an orchid. You would be looking to keep that orchid for your life and look at how much you are earning from the orchid to understand how well you have invested your money in buying the said orchid. Or you could buy a house, then you could look at how much you have gained financially from buying that house and will try and keep it for your life. Instead of buying any of this, if you spent your $10,000 on a share of an American company and just kept your money there, you don't get distracted by anyone else and their success in another stock or listen to a different opinion on investment. You decide to stay true to the investment you have made in a business that you believe will do well anyway because of your careful study of its past. Think of the amount of money you could have had by now. Warren Buffett calculates that you would have ended up with stock that would have been worth $51 million. There's no need for you to have knowledge and skill in accounting to be able to do this. You don't have to keep studying quotations that come across every day and just believe in this system that has kept the American system up and flowing all this time. That the system was going to be able to create opportunities to help overcome whatever difficulties that have come within the economy. You don't have to have the skill and ability that someone like Warren Buffett has to pick and predict the winning stock after the crisis, or understand what time is the exact time to sell or buy new stock. Rather, just pick a stock and stay with it during times of difficulty. That was it. There are many times that you can go back and look in the history of America that such instances have happened where maybe there was the opportunity to get a greater return on the investment. There is just one simple to your questions on how American businesses are going to do during your lifetime. Imagine in the same scenario, you have decided to listen to the ones who are professing ups and downs in the economy. They're not going to be coming in once or twice, but regularly in the lifetime of an average American. So you decide to stay away from the instability of the market and invest in gold for the same $10,000. For the same $10,000 you can get around 300 ounces of gold. The business is always evolving and growing thanks to innovations and inventions in the industries that they operate, but your safe deposit box will always hold 300 ounces. Yet at the end of the day, there is no outcome from the gold that you have collected, but there is no growth and no outcome. All you have had from the March of 1942 would be just the same amount of gold with no changes to the value of your investment, maybe up and down, but the return as steep as stock. So if you decided to invest in an asset that doesn't produce anything, such as gold, on the other hand, an asset like the stock, which is going to be earning more money and reinvest it, and then pay dividends and maybe purchasing stock. The amount of growth that the productive asset can be given, the growth over your lifetime to grow at least just 100 times. It just means for every penny you have spent on American businesses, you are most likely to earn at least $1 on it. The American stock market has been growing at a large, strong, and stable pace. So instead of worrying during every crisis that it faces and buying a seemingly safer and less risky non-productive asset, hence there's only one way, that is to make sure you have growth in your investment, is to make sure you buy and operate a productive asset and invest it in throughout your lifetime, because American market can bounce back all the time. There might be difficulties, but it is not to stop the market from bouncing back. The only way you lose this advantage is by buying a wrong share which fails badly in due time, or if you get excited at the perfectly wrong time and end up selling or buying, harming your portfolio. If you own parts of American businesses and put your money in it over the years on a constant basis, then you cannot compare it to something that is not going to grow or even show any income at all. Avoiding the trap of trying to jump in and out of stocks and paying the money that you earn to professional investor advisors who is telling you where to invest. After Buffett learned it himself through a demanding and long career as an investor at the top of the game. Just follow his advice, and you can escape all the worries that are coming from the Federal Reserve raising the interest rates or the fall of the market that is predicted to happen to the market soon. After all, for achieving, you don't need to have any sort of knowledge in account keeping or even understand the minute details of stock markets to be able to execute this plan. All of these don't last as long as your life, and therefore, just follow this simple mantra from the great Warren Buffett and you will be golden. If you find this info helpful, please give a thumbs up and subscribe for more. It would mean much to us, and it also encourages us to produce more valuable content for y'all. If you have a specific topic you'd like to learn, please leave us a comment below and we'll work on it for you.